And Angie, how are you?
Yeah.
Great
Good. How are
to
you?
What a time to have you back. I was just, reminiscing on the old days. And, when I first started talking to you, it must be 4 or 5 years now.
Oh yeah. Yeah.
And we were talking about for a long time, how China was stockpiling wheat. They were, planning for, when we had 7 years of plenty, and now, like, are we going to have 7 years of naught? And
Right.
now everyone's talking agriculture. It used to be kind of
Hmm.
a sidebar, and now you're center stage. So, am I correct that the planting progress is half of what it was last year? I think I saw.
Yeah.
Oh,
Yeah. I
okay.
mean, it's super slow. Last year's a bit of a poor judge, just simply because last year was such a fast start. We were pretty dry and warm for much of April into May last year. And so that was part of the reason is we were really able to get in and get after it early. And this year has not been the same. April has been cold and wet and just not conducive to field work. But this week it looks like we'll open up here for us in Michigan specifically, which we really don't matter too awful much, but we bring grain to the table too, But we're gonna be rolling real heavy, real hard this week. Probably see some pretty solid progress in the coming week, and we'll turn most of our attention to just the continued issues in the northwestern Corn Belt, parts of Iowa, Minnesota, the Dakotas will become center stage again. And the biggest thing right now a lot of folks are talking about is where we'll be when it comes to getting spring wheat planted. Minneapolis wheat is one.
Yeah.
After last year with the drought, this year they're dealing with too much moisture to start the season. So if it's not one thing, it's another. I think we're somewhat used to it in ag, but now that we are center stage, a lot of folks are paying attention, and markets continue to get even more volatile, with that attention that we're getting.
Well, it's unprecedented what's going on here,
Mhm.
isn't it?
Yeah, yeah, it is. I
So,
mean, we
also, how about when it comes to not just getting the the crops planted, are a lot of your contacts and farmers going without fertilizer, using less because of how expensive it's become and availability of it, or are people just biting the bullet and doing it because they want to squeeze higher yields out of their crop?
yeah, they're the price is incentivizing as much production as possible. Whatever Mother Nature is going to allow, the farmer's going to produce. Now, there are farmers that are using less, and they can claim that they're using less, and they're not wrong. I mean, there's three different types of nutrients, or what we use to fertilize crops. There's three different types, and so there's ways that you can kind of cut back potentially on your one or two types and just really focus on nitrogen or something of that nature. So there are going to be folks that maybe have maximized production or put as much as they possibly could, while inputs were cheap here these last few years onto their fields, and they'll make smarter decisions. But currently looking at where December corn is, looking at what the cost structure is, even for a grower that is producing under the national yield, trend line yield or something of that nature, even a producer in Michigan is still making good money. We're still looking at prices currently, dollar 50 above break even costs per bushel. And so there's still money to be made. But the price is going to have to stay high to incentivize, potentially those later plantings you may not otherwise see. Like I said, as long as Mother Nature cooperates, sort of deal. But the folks that I'm working with, the farmers that I talk to across the country and around the world, if they have access, it doesn't appear as though we're going to have any shortages. We may have some logistical snarls here or there where, because we're trying to shove 4 weeks worth of planting into 2 weeks, you could see some issues getting supply where it's needed as soon as
Yeah.
it's needed. But beyond that, the spring is going to go like most other springs. There's just a whole heck of a lot more at stake. If we were to see a global economic meltdown, in 2008 into 2009, commodities weren't able to escape that. And that kind of remains fresh in a lot of folks' minds. We're looking at currency conversion rates and what that means for our ability to export
Yeah,
later
that's
on,
been
you know.
tougher, right? With a
Oh
strong
yeah,
dollar.
yeah. I think
Yeah.
what was it? The U.S. Chinese currency. I mean, China's currency performed the worst it had versus the dollar in April,
Yeah.
worst month on record. You know, Monday alone to see what happened in the currency conversion rates, it was estimated the Chinese crusher lost 46 cents a bushel of buying power. You know, when it came to purchasing U.S. beans, 23 cents a bushel on purchasing U.S. corn, and right now China's the only game in town. The rest of the markets are you know, sourcing other grains if they can. They're cutting back where they can. We've seen Japan start to pull a lot of corn out of Argentina as of late. You know, that Japan's one of our largest purchasers of U.S. corn traditionally, but the currency conversion is just absolutely killing them. You know, it's worst in 20 plus years. And so
Oh
there's
yeah,
some
because
things
the yen has
happening.
been so weak.
Yes. Yeah. Yep.
Yeah. Okay.
So their
Yeah.
buying power has been vaporized. And so
Yeah.
that's one of the things that we're really watching closely here on the grain side is in the short term, we need risk premium. We need to ensure that prices stay high. We have to encourage as much planting as possible in the face of higher input costs and things of that nature. You know, we really have to make sure that the price stays high to incentivize that production. And if, as long as Mother Nature cooperates, which is a big if, based on what we've seen over the last few years, you know, we will start to pay attention to what's happening. And there are some signs that we are seeing demand diminish on the export side. And the exports have
Why?
been a big portion of what had fueled this.
Because of
I'm
higher
sorry.
rates? I mean,
Yeah.
the Fed wants demand destruction, but do you get demand destruction
Yeah.
with, food?
Yeah, I think you can. I think the currency conversion rates are going to push our traditional buyers to source potentially non-traditional supplies.
Okay.
You know, like I said, Japan going into Argentina, they've bought bushels out of Argentina before, but not to the extent that we've seen. I mean, it was a couple weeks ago. They didn't even show up on an export sales report, and it's the first time I think I can remember Japan not buying a chunk of corn that week. And so, and I'm not sitting here saying that this market has to go to zero. It absolutely does not. I mean, you said it, we're in an unprecedented time. You know, we've seen so many supply disruptions. You've got an estimated 25 million metric ton of grain sitting trapped in Ukraine right now that can't
Yeah.
leave. You know, you're running
Well,
at
some is
20% of that
leaving.
normal.
Russia's loading up trucks with
Yeah,
Ukrainian
yeah,
wheat.
they're
Yeah. Yeah. Some's
helping
leaving.
themselves. I think it's on its
Yeah.
way to Syria or Lebanon at this
Yeah.
point. But yeah, so you've got that happening. You've got the EU and Ukraine working together to try to promote, you know, movement of grain via land. But you're currently exporting, you know, 1 million metric ton a month, which is, like I said, less than 20% of their pre-war capacity. And so the world is has been flipped on its head when it comes to supply availability in a lot of
Yeah.
things that we've
Yeah.
seen. We've
Everything.
had conversations in the past regarding, okay, well, we're going from just, or you know, hand to mouth to just in case. And so there had been conversations that we did see stockpiling last year and last summer for some of our customers. But you know, yeah, the $1 million question becomes, does demand stay consistent even if the global economy starts to spit and sputter, you know, like we've been seeing to a certain extent.
Okay. So, say for example, we had some type of break in grain prices because the dollar might have another wave to the upside. Uh, would this be a good level for corn? 640 if you could get it. I mean, the less important cycle was we had the harvest lows, right, Angie?
Mm-hmm,
That's
mm-hmm,
what we had here across the board. That was an important period also in the beans.
mm-hmm.
What's the next important part of the cycle for grains? It's planting. You ever get
Yep.
any big moves out of planting, or are we going to have to wait till sometime this summer to see how, crop progress is?
Yeah, traditionally we will rally into, I say, Mother's Day weekend. You know, it's just an easy way to kind of remember middle of May.
Okay,
That's when you kind of add in as much risk premium as you can to, like I said,
so
incentivize
it's
planting,
seasonal.
incentivize
Yeah,
production. Yep. And then we just kind
Okay.
of sit and watch. We watch what crop conditions are doing. We watch
Yeah.
what is happening, when it comes to production potential, extended weather forecasts, things of that nature. And so for over the next 6 weeks or so, we'll probably catch our breath. We get a USDA report out tomorrow that'll give us insight into new crop supply and demand outlook, a few things like that. And then generally 4th of July, 4th of July fireworks, that's when we traditionally see the bulk of the US corn crop getting into pollination, or at least get a feel
Right.
for what pollination weather looks like.
Right.
Pollination is important in corn production. It basically determines what your yield's going to
Yield.
be, or at least it
Yeah.
gives you a good idea as to whether or not you're going to maintain the potential of trend line or better. And so
Yeah.
we tend to rally as we work our way past mid-June towards the 4th of July. And then that usually sets the stage for what happens after that. If we get a cool and damp, or at least look as though we're going to get decent chances of rain and things of that nature, as we get into the 4th of July and beyond, then you tend to see this market really kind of fall off, the corn market at least fall off as we work our way towards fall. Soybeans are a little
Harvest.
bit later. So soybeans may spend a little bit more time languishing sideways here for a while. August weather is important for soybeans. And so as we work our way towards the tail end of July into August, that'll be when we start to discuss what soybean production potential looks like, if we're going to get decent rains, anything of that nature. And so the market's probably going to chill for a little bit, to be honest. I mean, we have some outside market influences that we're going to be watching. We're going to continue to pay attention to what's happening in China, because they're really kind of our biggest source when it comes to export demand. But to really ramp this thing up right now, we're probably going to be short on fireworks, until we get a better feel for what the summer weather pattern looks like. And right now, the risk is that we do see the pattern be turned hotter and drier as we work into July, August, and September, based on the most recent Euro models. And so
Yeah.
to say that the potential for new highs is completely off the table would be a lie at this point. But in the short term, I think you could see some continued pressure, just simply because the stories are kind of old.
Okay. You sound somewhat or very sanguine, actually, and what with a lot of people pounding the table, maybe it's not going to be. I've told people that, yeah, high prices are not that welcome,
Mhm.
but it's better to be able to pay a high price and not be able to get something.
Exactly. Yeah. And I
So
mean, we're lucky. I mean, in the
yeah,
US, we're very fortunate. We're very well connected to our food supply. I say that. I mean, the middle class and upper middle class, I worry, about what we're seeing when it comes to inflation and the influence that you're going to see on the,
global.
yeah, I mean, globally
Yeah,
and everywhere. That part is concerning.
yeah.
Just
Last
simply
time we
because.
had a kind of a squeeze on grain prices was the Arab Spring.
And you're starting to see, what was it, Sri Lanka, is it 30% inflation, I think. So you're
I think
starting to
they
see some,
defaulted. They had a
yeah,
default too, didn't they?
yeah,
Yeah,
yeah. And so you're starting to see some of that, and you're going to. People are going to become angry. And you were talking about CPI, and
yeah.
one of your panelists had mentioned, I don't see any indication that inflation is starting to fall off. And I think we could all agree, yeah, that is the case. Like, I think May could even show higher from here, because you are going to see grain prices stay supported, and obviously we're seeing energy prices stay supported, and there's no real easy solution at this point in time. And so yeah, I think things get worse, but then at the same time, the Fed has literally said their job now is to crush inflation. And so does that mean the inflation trade is over for grains, and how long does it take for the market to recognize that? And so, yeah, I mean, there's a ton of questions. We're in a very unprecedented place because of the supply issues that we've had, the production issues that we've had, the huge surge in demand, this, that, and the other thing. But I think, I'm working towards my 19th harvest now. And so one of the things I can say is we've always managed to produce a crop, and price has always done its job to ration demand if needed or encourage supply. And so I trust in the theory of economics and supply and demand as they work. And so yeah, you are a little sanguine in the sense that could we have a blow off top? Yeah, eventually. I mean, things could really explode, but long term, I think we see it may take 2 or 3 years, but we work our way back towards more than adequate supply, and suddenly we're talking about how do we encourage demand again.
Yeah, I remember during the Volcker tenure, um, that corn kept going higher while everything else was breaking from interest rate increases, and
Mm-hmm.
that he was pretty extreme. But I remember it took a long time for corn to break. It was the last one to cave.
Yep.
So it's probably going to be, and I don't know what the fundamental situation was back then in the late 70s, but 1980, what we had going with grains. But it's just hard for me to see how Fed policy could have much influence over things that grow.
Isn't it amazing? Yeah. It's always fun about once every 10 years. I mean, because '08 was very much the same. We got that big inflation trade and ran up really hard. '08 will stick with me for a long time because that was the year that we had to pass hedges off the company that I was working for because we'd run out of the ability basically to access credit to margin our position.
Right.
Which we're hedging physical product that'll deliver at a later date, but you still have to pay to maintain that position. And so we had to pass our hedges off to an ethanol plant. And basically that meant that we gave our 650 contracts, or all of the 650 cash contracts that we had written for new crop corn, was held by this ethanol producer. And they apparently blew out at the high, basically lifted all of their hedges and watched the market completely disintegrate from there and went bankrupt. And so then we had to look at farmers and tell them their 650 contracts were now worth, where the market was, which was about 380 at the time. And so I learned at that point, never say never about anything that happens, and never assume that which direction the market's going to go, or that the outside market fundamentals won't influence things. And I think it's provided me that sanguine sort of attitude in a time like this.
Yeah, like anything and everything, count on it happening.
Yep.
Why are we still producing ethanol in this environment?
Well, for one, ethanol had replaced MTBE. So MTBE was a, kind of an additive that we were using in unleaded fuel that had been found to cause cancer. And so we happened to discover that ethanol was a very seamless replacement for MTBE that provided us, that ability to kind of have an octane boost and work to make our fuel supply, safer, so to speak. And so ethanol demand, there's about 10% of that gets blended into or there was 10% of MTBE, and basically 10% of ethanol gets blended in. And so, I feel that there's a demand level there that remains and should remain. Much beyond that, yeah, I'm supposed to beat the drum and say that we should be using, as much corn as we can in fuel production. I don't know. I think all hands on deck, when it comes to energy. I'm open to everything from fossil fuels to renewables. So
Biofuels.
yeah. Renewable diesel is one that has really kind of stimulated this move higher in soybean oil. That's one I tend to scratch my head about just a little bit, in the sense that, we're working to introduce about 400 million bushel worth of new demand for soybeans that need to be crushed in order to be converted to diesel. That truly is a food. Vegetable oil truly is a food, whereas corn, you have to turn corn into something. Now, granted, you have to turn soybeans into vegetable oil or something of that nature. But yeah, it gets more difficult when you start to see vegetable oil prices around the world surge to record highs. And you see that Arab Spring, this will compound it. The Arab Spring was a lot to do with wheat and vegetable oil. In 2008, soybean oil stayed around 35 cents a pound. It's currently trading 81. And so that's a huge change. Honestly, I don't do much with rice.
Yeah. Okay.
And so I would be speaking completely out of turn.
Okay.
But I do know that, demand has stayed steady. I know the Chinese diet, is growing when it comes to wheat. Their wheat demand is increasing, more so than their rice demand as of late. They've discovered pastries and things of that nature. I say they discovered, that sounds disingenuous in that sense. But I mean, once you get cake, you kind of never go back. And so that's been one of the things that we've seen lately is a surge in wheat demand over rice. But I think rice
Okay.
remains a staple, around the world and remains supported.
Well, everyone, if you want to keep your finger on the pulse of what's happening in the agricultural markets, and as you can tell, Angie knows her stuff. Your new website, your new business. You have a newsletter that people could sign up for, I believe. So,
Yeah.
best way to find Angie on Twitter at
Yep.
the
At
goddess
Goddess
of
of Grain.
goddess
Yeah.
of grain. So you could worship her on Twitter, or you could sign up for her newsletter and know what's happening during critical times of the growing year. And I know a lot of just normal people and investors that never thought about it before are beamed in on the grain markets now. So Angie would be a great resource for you. And
Yeah.
really,
That's
really appreciate you coming back. And hopefully we're talking about bumper crops in the U.S. to take
fingers
some of the,
crossed for sure. Yeah.
yeah,
I think that would be nice to be able to breathe easy again. I don't think I
yeah.
have since March of 2020.
Yes,
So
it'd be, yeah, without an N95 on.
right,
Breathe
yeah,
easy without the
true.
mask. So,
Good point.
uh, yeah, so thank you, Angie, for being with us today and sharing your knowledge and wisdom about the grain markets. It's definitely center stage. Make hay while the sun shines, Angie.
Exactly. Thank you for having me. I always enjoy it.
All right. Angie Setzer, everybody. Uh, your grain resource. Check her out on Twitter and at her website, Consu, uh, what is it? CONSUSROI.com. Consusroy. Is that
There you
right,
go.
Angie? Okay.
Yep. It's
Uh,
the god of protecting grain and storage, actually, the Roman god of protecting grain and storage. But
God, you know
apparently, it
all.
also means something else in French. So just
Uh,
don't Google the translation.
all right. All right. Thank you, Angie.
Thank you. Have
All
a good
right.
one.
All right. That's it, everyone. You could join the team in 20 minutes on the morning edge. Have a good day. Enjoy your trading and um, remember, don't just count your pips, count your blessings. And if you have food on the table, you may even want to think about, you know, getting some canned food and having a little food storage program. So that's a wrap. See everyone tomorrow. Join the team in 20. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.